Okay, so we are going to go straight into some serious content. And the best way for me to advise you how to use this event is to get a notepad and pen, paper, whatever, just write down some of the things, because I'm here with my beloved flip chart. That means I am going to write something for you, because I honestly love these sessions. This is a brand new session I'm doing. It's different to the one I did 2 weeks ago. So if you guys did turn up to the one I ran 2 weeks ago, I am changing some of the content. I always do that. This is what a live event's all about. Every time I do an event, I change the topics or add more content, because this is my daily life. Everything I'm talking about here, it's stuff that I'm dealing with on a day-to-day basis. So those of you who haven't seen me here before, obviously we have not used any advertising. So I'm only going to assume, and I can assume, that you followed me on social media and you've on my email list of some sort, or yeah, that's it. So you know me, you know who I am, you know what I do, etc. And I'm excited to kickstart the day. So my biggest mission this year is to bring in some fantastic founders to Monaco and pitch for capital. However, as well as founders, a lot of people think, I'm not a business owner. I haven't got a business idea. I'm not even a startup. How does this apply to me even as an employee? This definitely works for an employee, because what I'm going to be talking about in this session is relevant for those who want to get paid more. My simple philosophy or belief around money and pitching is, if you can pitch better, you'll get paid more, full stop. And that applies for business owners, for people in a job. For example, let's just take everyone who's thinking, I'm a simple individual in a monthly paycheck, etc. You guys are super important, because you may one day be out of a job. Therefore, you have to interview for a new job. You may have to, you should be looking at continuous promotion. How are those employees making more money compared to those others who just literally just sit back and wait for an annual increment in pay rise? It's not going to be very exciting if you don't know how to pitch yourself. So pitching yourself is really, really important. Now, a bit of my background and why I'm so excited about this. I've been in business since 2004. I will show you a quick visual, actually, because it's always quicker and better to do it on a, not PowerPoint. I hate a PowerPoint, but it's a very quick visual because it's easier than me talking about it. So I'll give you a bit of background, because there are so many people here that I have no idea what your backgrounds are and who you are, because you're new here. So I'm very excited to tell you more. But in particular, if you guys have been watching me on social media, the reason why I'm so excited about putting you in Monte Carlo is I live in Monte Carlo in south of France, and I have UK as well. And I absolutely love the amount of opportunity there is in Monaco. And what I'm seeing, though, is very bad pitches. So I'm not seeing enough quality founders coming and pitching for capital in Monaco. And I've been here for about 4 years now. And obviously 2 years of COVID take away some of the vitality of life. And I really, really dug deep into what is available. And most of the talent that I see from the UK and Europe, they go to the US, myself included. I've raised 350 million for a property fund, and I got that from the US. I'm raising now in Monaco, and I'll tell you all about that. But the thing is, I instantly, when I think of raising money, London, maybe, but then I go straight to US, because the US mentality, Silicon Valley and all of that, they are a lot more exciting when it comes to investment. However, where is the wealthiest where is the wealthiest population in the world per square foot? Statistically, in Monaco, so the most amount of millionaires, billionaires are in Monaco. And trust me, I've seen them casually walking past. It's a very nice and little community, very small. So you have to, really get involved in these little circles to get to know them, because they don't just talk to anyone. But my point is that there is so much money here. My aim is to bring the best talent from Europe, particularly, definitely London. And I want to make Monaco, it should be the Silicon Valley of Europe. It's nowhere near that. And I'm a thought leader to the government in Monaco. And that's why I'm so excited about it. Because, genuinely, I'm thinking, this is a great business opportunity for me. And we're just sitting on an untapped gold mine. You know, it's like literally so much money there, but really bad pitches. So here's me trying to change that. So this is what we're going to cover very in this 1.5 hour session. I am going to take questions, and I'm interested in your particular journey. If you've got a pitch, kind of like, you don't have to be like a full-blown pitch, because I'm not expecting that here. But if you have something that you're currently pitching capital for. I'm a venture capitalist. I'm looking at pitches all day long, reading pitch decks, watching people pitch on a weekly, daily basis sometimes. And it's quite, you know, like I can tell very quickly, because my filter for bad pitches is quite, you know, like on my level. I don't know how you'd say it, but generally I can tell very quickly when something is not right. So I would love to help you out if you have questions on your particular pitch and your idea. Even if you're a startup, then I would love to help. Okay, so first and foremost, the problem I'm seeing, right, with women. So we've got men versus women. Like, I'm going to bring this topic up, even if somebody else doesn't want to, because this is a really bad stat. You know, there are so many people that women are very much more educational based, right? Education, education, education. Amazing. They will learn things, like if they want to feel confident, they will learn. They're actually very academically, like they're much more gifted, in my opinion, than men. So if I know a female is going to learn something, I usually see them do a better job at it than a male. This is from my 10 years of coaching. I've been in this coaching industry since 2012, right? And why am I telling you this? Because I don't want women to hide behind education anymore. Like, I honestly feel that education is where they hide, but what needs to be happening is the ability to pitch. So that they are not pitching. Men are straight away, the confidence I see in pitching for capital comes very natural for men. And I don't want that to be the stat forever. You know, I'm really keen to change that. And when it comes to the confidence level, again, they have tons of it. Lack of confidence here. Like women, the confidence level is low. And because of that, where do you think most of the money in the world of venture capital is going right now? It is going 98% to men, right? 98% of the world's private equity money, you know, the big raises, etc., are going to male founders. Male founders. Sorry, if you can hear Coco snoring in the background, I apologize. Maybe I should get George to take him away, but I can hear him. It's quite funny. Anyway, female founders here. Female founders. Now, this stat annoys me. This really, really annoys me. Now, if you're a female like me who grew up with the guys, I only had cousin brothers. I never played with the girls at school. I wasn't really interested. I found them really boring. I enjoyed racing. I used to race cars for money, you know, like when I was a teenager, etc. So these type of things come natural to me. For me to hang out with the guys, compete with the guys. I was a sporty kind of individual. I did martial arts for 17 years, and I competed and sparred with men, you know, weight categories, but men, right? I did not enjoy sparring with women. So that says a lot about someone that I know as an individual like that is going to be far more okay and far more confident pitching in a male-dominated world. I've grown up in a male-dominated world. Property, when I was doing it in 2004, women were a minority. There's a lot more of them now, which I love, absolutely love. But in a group of networking, a load of men, I was one of 2 women, maybe 3, and the other 2 were wives of some guy they had turned up with. I was the only one who turned up solo and actually had my own like intention to invest and was like my own person, not supported by a husband, not supported by parents, not supported by God knows what, right? So my point is there's a lack of women in property. I love it. It's changing. And this is why I'm doing what I'm doing with the world of venture capital, because I feel like the same thing will happen. Give it 20 more years, this stat will have to change, but it has to change by individuals like myself, you know, pushing other women by example to say, come on, raise capital, be brave, and like first of all, learn how to do it, but then take action, like have the confidence to pitch. Ultimately, everything, including property. So those of you who want my 100% bridging finance, like the money's on the table, it's waiting. Where people struggle is in the pitch. They literally don't know, like when it comes to pitching a below market value deal, you could be looking at a property that's worth 100K, right? For argument's sake, the properties I had most of them I bought and I bridged for under 100K. They weren't very expensive properties, they're just bread and butter buy-to-lets. Now they're worth about 200K, right? So they've gone up in net value and everything else, but ultimately they were cheap properties. But you take it, the same rule applies to even £1 million property, $500,000. I used to be so good at being able to pitch that property price. I used to go into courts of law to fight bankruptcy. So there'll be me representing my house owner, and I would be fighting KPMG in court to get the house from them, which was going through bankruptcy or repossession, etc. And I used to win because I know how to pitch, and this is why I'm trying to show you that women and men, if you want to be successful in business, in your job, in any other factor in life, you need to learn how to pitch, communicate well. Pitching is just communicating. People think, I don't need to pitch because it just means I have to sell something. You're selling yourself. And people are going to look at you and see whether or not they want to do business with you, want to give you the job, want to give you the promotion, or want to invest capital with you, right? So if you're not comfortable pitching yourself, forget trying to be anything else. Honestly, the whole world evolves around, in my opinion, pitching. I don't think it's talked about enough, which is why I really want to work on this. So I'm raising the bar even more in my training to say, come on, ladies and gents, we need to pitch better. Men, look, this stats say this, but there are men who still struggle with confidence and pitch, and that's why I want to help as well. So what else can I tell you about men and women? Ultimately, I want to keep it simple. Very clever. They tend to hide behind education, but education is key. Both of you need it, because if you don't have, so I'm going to go to what makes a founder investable is having the financial literacy. Some of the things that you guys pitch, if you don't understand numbers, if you don't understand asset classes, I know this is equal here. Men don't have the financial literacy as much as they think they do. They might feel confidence. I'll get rid of this pen. You can't read that, can you? Well, in a nutshell, what I'm trying to say is that the literacy level of money is the same in men and women. I think females are actually better at understanding asset classes and investments, etc. They know the theory of it better. It now just comes down to the confidence and pitch. Men, I typically see, have tons of confidence. They almost pitch badly because they are too confident and they don't understand their asset class well enough. So I'm giving you both sides because this is what I see. So the best combination is have the financial literacy, understand what you're pitching, and make sure you pitch big, right? If you're going to make any money, you got to go big. So what are the things that you need to do to raise capital? Let's talk about the do's and don'ts. This applies to men and women. So when it comes to pitching, the first thing you need to know, and this could be you're applying for a new job, applying for an interview, etc. You could be, as an investor, we'll talk about you later, because everything I'm talking about here, investors are judging you all the time. If you're an investor like myself, I'm always judging the person in front of me. When we're pitching, what is the actual biggest thing here that we're actually trying to underwrite? What is the biggest asset class? When you're pitching, when you're an investor and you're speaking to an individual and they're pitching you for capital, what is the big thing that you're judging ultimately? Okay, the do's are, as a founder, you need to be impressive, right? You need to be impressive. What does that mean? Please have social media presence. I know people don't like it, and some people hate social media. I'm not saying have 50,000 followers, have 100,000, or you just need to be on social media, because the world is very digital. People want to see, who is this person? What are they about? What are they? And everything you said, the values. This is where we see the values of the individual. Because if I get pitched by a founder that I've got no LinkedIn, LinkedIn is the only thing that actually matters to me, because in LinkedIn, you get kind of a summary of what they've done, right? You get to see what businesses they've been involved in, their education, and, it matters. It really matters, because people are judgmental, always going to judge. So you want to have some sort of presence as a founder, have some, I'll get rid of this pen. You need to have some sort of branding. Now, again, you don't need to spend money on this, but you need to have a nice photograph, like look professional. Don't put some, you know, one of the worst things I see is when people add me on LinkedIn and say, I want to pitch a capital for you, but then they've got no photograph, or they've got like some, like completely anonymous. Like if I don't even know if you're real, you know, and if they have some really like a picture of themselves on a holiday with a weird, you know, looking too casual, like don't look too casual. People are judgmental. They will judge you in the first 4 seconds, you know, so it was too quick for me to be ignore message because I get so many requests. The ones I take seriously are the ones that have really curated a great branding and have made an impression. Social media is the key here. Then how you speak, right? So what else are we looking for? How you actually speak when you're on a Zoom call, because most things these days are not in person. So most of the people I'm speaking to are US based, European, like a few in London, you know, like currently this week, for example, everyone I'm speaking to is either in Luxembourg, in Monaco. I can meet them in person. That's fine. That's just because of me. But if I was in London, again, I would be on a Zoom call. I've got some people in Dubai that I'm speaking to, US. So those are my areas. But how do we always communicate right now? Through Zoom. So if you're someone who hasn't got a good Zoom setup and I can't see your face properly, like the simple stuff, this is also automatically going to make it difficult for me to connect with you. You know, like make an effort. And if you are tardy, like tardiness does not work. For someone who is late, so I had this meeting last week with some guy from Geneva that was really, really keen to do XYZ. And I'm like, okay, this looks impressive. And then you got to test them out, right? They turned up on the Zoom meeting. Well, they didn't turn up to the Zoom meeting. 20 minutes later, I messaged them on LinkedIn. I hate people who don't show up on time. Oh, I got the times wrong. You know, like that's not my problem. That's your problem. If you can't diarize your life well, these are simple things, right? But this makes all the effect because the beginning is the mountain. To get an investor, like this could apply for your job, your business, whatever, right? Even your clients. If you're not on time, if you're looking like you're just unprofessional from the very beginning, there are no second chances. Life is too soft these days and people believe they get second chances. In business, in the world of investment, I don't do business with people like that, right? There are no second chances. If you're not going to turn up, if you're not going to be acting like you really made an effort to be there, if you don't respect the individual, then just don't turn up. Like, do not show any waste. Don't waste their time. I will not do business with that person. And I have no hard feelings against them. Don't get me wrong. I don't waste energy on having hard feelings. That's too much. But it's just a simple case of their standards are not here. They're down here somewhere. So why would you do business with someone whose standards are down here? So simple things matter. Appearance, right? So I guess even here, we got to put in here, appearance. We live in a world where we are seeing too many men in a sweatshirt, hoodie, pitching for capital. Look, that's okay if you've got a business. If you have a business and you're already making millions, then turn up in a hoodie. Women, I don't think it works for us. Like, I don't enjoy pitching in a hoodie or working in a hoodie. I don't enjoy it. I think men and women have differences. Like, men can get away being really unattractive, very unpolished, like really unattractive, right? Look at the wealthiest. I mean, you only have to look at SBF. The guy was basically taking everybody's money, but he was horrific in every way, right? Rocked up to events looking horrific. If you don't know who I'm talking about, Sam Bankman-Fried, like the guy should be in prison right now, but he was so in bed with the government of the US that he is amazing. This is a great example of how men get away with bad behavior. Women have to be, and this is the inequality here. I'm just giving you the facts, right? No one else wants to talk about it. I'll talk about it. Women have to show up well dressed. Otherwise, can you imagine me rocking up here in a hoodie? Like, if I never knew you, if you never see me on social media, it'd be the worst thing ever, right? Rocking up in a hoodie, no makeup, and just like, you'd be like, who am I here wasting my time on? Like, this person doesn't give a shit about me, you, anyone else, right? She just turned up. Don't do that. Men included. If you're someone who's looking for capital as a startup, turn up well-dressed in a blazer. You could wear jeans if you want, but just turn up well-dressed. It's so unattractive. I have seen pictures in Monaco where I've cringed. The guy had his belly hanging out. He had a polo shirt all like crumpled up and probably had some food on it, right? Don't give me the I'm a tech guy and I can rock up like a tramp, because you are not a billionaire. Like, until you're a seasoned billionaire, don't, and you've got loads of PR around you, then yeah, I love that world. You know, once you're a billionaire, then you can dress like a tramp because you earned that right. But don't do it beforehand, because I honestly find it really, really off-putting. It shows me low standards. Have some respect. Dressing well is a sign of respect for your audience. And it gives you confidence, right? It shows that you actually care to give value to your audience. So the don'ts are tardiness and poor and sloppy appearance. So these are simple things, right? These are simple things that I'm going to tell you, but people need to hear it, because we live in this weird world of social media where men in hoodies are allowed to get away with showing that they're like this great entrepreneur pitching for capital. And I just don't want you guys getting the wrong, because if you want to come to Monaco, no one's coming to Monaco, and I'm going to give you guys an audience, right? They're going to be just billionaires or multi-millionaires, you know, but they're not. I'm not going to allow, and I'm telling you this now, I'm not going to allow a guy in a hoodie to rock up on stage, because that's not my standard. I want polished. So if that's you, then, you know, great, we'll carry on. And I think everybody is okay with that, because it's just natural. Okay, so what else should we be doing in the do's, right? So founder, branding, appearance, yes, your founder focus. So the other thing, notice that I mentioned founder first, right? Most people, and I think someone mentioned it first, everyone thinks that a return on investment is the only thing people care about. A return on investment is not the only thing. The first and most important person is the founder, because if the founder is weak, the return on investment is not going to happen. On paper, everything has a return on investment. Property, you know, you can talk about a property deal, the simplest asset class in the world. It will make sense. But if the founder can't execute or find the property or sell the property, then just imagine my fund, right? If I was not an impressive individual, or if I did not have high standards, which, by the way, I pride myself at very high standards. So that's why I can raise capital, because people have seen me, they've tested me. You've got to be able to handle like high standards. And I'll talk more about these things, more the details in the founder. But in a nutshell, if I put these client funds into a fund, and what if I couldn't find the property deals? And what if I couldn't exit the deals? There is no return on investment, no matter how good a pitch deck looks. So the pitch deck and the return on investment is good, but it's not the only thing. Do not rely on return on investment alone. If you can't deal with the execution part, if you haven't got a history in entrepreneurialism, if that's even a word, then you are going to struggle to get any traction. So startups, if you're a startup and you are not a serial entrepreneur, you're going to struggle, because there is a bit of humility required. So I'm not saying you're going to not get the money, but what we have to do is don't take too much capital and give too little. This is something you should not be doing. If you're a brand new person, so just imagine you're a startup and you said, you've got this great idea. This is the worst type of individual I meet in a founder. They are so in love with themselves, which is great, but slightly delusional. And then they give me this startup idea, which on paper sounds good, because everything sounds good on paper. But then have you been in, how much experience have you had in this industry? Oh, I've never done it. It's an idea. I'm working in a job right now and I'm living in my mother's house. But this is a real life story. A Jewish founder, Jewish founders are genuinely good, right? Because the Jewish community is very good at making money. So we have to learn the culture. Hence, I'm mentioning the word Jewish, because when I'm dealing with any ethnicity and my background, I need to know what their values are and the culture is. This individual is from New York. And it's actually a founder it was a fund in Monaco that asked me to work, like just kind of have a discussion with them and see what they're made of, because they were struggling with them. And I said, okay, let me speak to them. Let's see how good they are. And it's a tech guy, but he hasn't got. It's just proof. There's no proof of concept. There's no actual real life tech. It's an idea. Or if it's very light idea. And what's worse is he's 42 and living with his mother in Brooklyn look, I'm going to be very judgmental as an investor. What that shows me is that you can't make enough money to put a roof over your head. You know, like if your mother was ill and whatever, and you wanted to live her, but, you know, have some investment properties then. But the guy had no investment properties. I don't mind people living with their parents. I'm not, but have you got any other assets in your name? Are you, you know, a property landlord, or have you got anything else successful like going for you? No, he's working in a job. In fact, 2 jobs to keep himself going. So how is an investor going to invest in a founder with a great idea who wants to give away this much of their company for that much money? Please don't do that. It's very unattractive. It's not going to get you anywhere. So if you're a founder of a startup, be willing to be mentored. So something that I would really push here is be coachable. You know, it's very easy to see someone who's not coachable. Coachable are people who won't turn up to this event. For example, we had about over 150 people register for this. You know, it's just a casual thing. I don't use advertising or anything. So when we do advertising, eventually we'll have, you know, bigger rooms. But right now, I like the fact that you guys have come across me from social media, and look how many people are here versus who are not. So that's the difference between someone who is coachable versus those who are just like flaky, you know? So it is a big deal. But if you're going to be a founder as a startup, be more coachable. Be willing to work with your investor should technically be mentoring you. So don't look just for a armchair investor, because I don't think that will work very well. I think you need to have the approach of, are you able to invest, but I will give you a massive shareholding, and can you mentor me as well? That's going to be the best strategic alliance you can make. If you're just going for the money alone and, oh yeah, I'll do it myself, I don't need you, I've got my team, you won't get anywhere. You want to pick your right investors. So that brings me to the next point, which is you got to choose, pick investors. Not every investor is going to like you, because there are different. Some investors are going to just be armchair investors. They want to put their money in a VC fund. You know, they don't want to mentor. They don't want to spend time on you. And if you're a mid-stage company, which is already cash flow positive, you would get away with that because you're just getting a capital injection and you can carry on. However, if you are a new company or a brand new person, then you will not have these type of investors. So don't waste your time pitching to the wrong investor. Okay, so I guess pick your investors. So do pick. That's really important. Don't forget to read the audience. Okay, what does that mean? What does read the audience mean? Like, why does it matter to read an audience when you're pitching? One of the worst things you could do is a repetitive, a non-tailored. So this becomes a non-tailored pitch. So in a nutshell, you need to know if you're speaking, you need to kind of understand the background. Are you speaking to family offices? Family offices, for those who don't know what that is usually like Elon Musk. We all know who Elon Musk is. And one of my friends in Monaco, he is the guy who sold the yacht deal to Jeff Bezos. So, you know, how do they speak to Jeff Bezos? Do they just ring up Jeff Bezos? No, they speak to his family office. And that Jeff Bezos comes eventually to the meetings after the family office have decided this is a good deal. Now they're doing the same with Elon Musk. They're trying to get him to, you know, be okay with a green yacht. Like they're trying to make it completely green. They're in conversations with his brother, who is part of the family office. But anyway, my point is to build further on Robert's point is know your background on the audience. The family offices, who are they representing? Because a lot of people will say, oh yeah, lots of family offices here in the room. What you should be asking for is, who are these family offices representing? What kind of investor? You know, are they, some of them, for example, I'll give you real life examples in Monaco. Family office events, some of them are Swiss family office representing a medical company. So obviously they're only going to be interested in medical technology or medical pharmaceuticals. So don't pitch them a fintech. You know, like this is what I mean. Another one will be a family office billionaire of a television company, you know, like the game shows that we see in Australia. Like they started with Neighbours, Home and Away, and then they did all the game shows. That family office is in Monaco, right? And they've got a Bahamas office as well, but they have a massive presence, and the main fund or the family office CEO is a connection of mine, and she's a female. That's why I'm kind of excited by her. But, you know, she represents this type of investor. So am I going to get anywhere pitching her? Only thing I can get away with is real estate, because it's very broad spectrum. Everybody understands real estate. But could I pitch her a fintech? No, they are game shows. So if I pitch gaming, maybe, you know, because I can make the fintech more gaming. So that's what I mean. Like, you need to understand, you know, simple example. If they like medical, don't pitch them fintech. And often what I'm seeing in Monaco is they just put a whole load of people into a room, and then the individuals just change, and like the pitches change from fintech to God knows what, and everybody's like the investor profile is unqualified to be there. Like, they're not interested, and very often they don't get the capital because, one, the pitches are bad, and second, the audience wasn't tailored. So what I'm going to be doing with all of you is, if you have got a company to pitch or you want to raise capital, then I want to put the right audience in front of you. Or third thing, there's 3 ways. You know, I can build on this a lot, but you get the idea, you know, like to, the other thing I would say about, last thing I would say about this is, when it comes to audience, there's 2 things that will be very key: humor and, culture. Okay, so understand culture. Humor is a very specific one. So if you're British and your British humor is very unique, it can be very dry. It doesn't work in the US, right? So don't use some weird, wonderful Northern British humor. Like, there are some people that have this, they lead with the humor. I get it. But if you're British, that humor will only work for British, and Americans sometimes will not work in Europe, you know, so they've got a very different. So if you're going to have any kind of humor, make it really broad spectrum humor that everybody gets, not some tailored, like French humor. If they speak in French and they say something funny, I just think it's not funny, you know, because if they then translate it, I'm like, that is not funny. If I was French speaking and French original, like origin, maybe I'd find it funny, but French people make that mistake all the time. I get a lot of investors coming from Paris to Monaco, like founders rather, and we hear pitches as an investor group, and it's boring. So humor doesn't work unless you tailor it right. So just keep it simple. Simple stuff works. And culture, really important. For example, when you are shaking hands, or, you know, knowing the etiquettes of your culture in your investor circle. So, for example, if you're in Dubai, knowing the culture standards there, like, it's an obvious thing, right? You can Google the differences in culture. If you go to Asia, if you go to US, is quite easy to deal with. But it's when you go into different cultures, the Indian culture, the Asian, the Chinese culture, there's a lot of money that I've, been exposed to from Chinese money, but it's come from Hong Kong, or it's come from the Fosun Group, this big group like SoftBank, but it's a different one called Fosun. And they were actually one of my first investors when I started one of my businesses, right? So really, really exciting to deal with them. And you've got to have a certain level of respect. Like, you need to understand a lot of them. European culture as well. There are differences between Switzerland, Liechtenstein, Monaco, France, Italy, you know, like every country's got their thing going on. And I think you need to understand that. But those of you who are investors, why does it matter to know this? Because investors are going to be the person listening to this, right? So it's very important as an investor, you understand everything the same way I'm explaining it to you. Read the founder, read their ethics, read their value, etc. Right? Really, really important. The next thing is understand what company level. So who does this apply to? Being able to pitch well, who does this apply to? Let me just remind you, you could be employed. This really applies to you. You're employed. You want to go for promotion, or you want to start a business. This applies to very corporate executive individuals, right? So I'll give you an example here. Excuse me. Very often I'm coaching VIP clients who end up being tier 1 bank executives. What is their aim? They get to around 50, mid-50s. They feel like they've overdone their banking career and they want to create their own fund. They want to step out, but they're very scared of doing that. And so what does it come down to? It's their ability to pitch. If you can pitch well, you can leave your job. and you can be a business person. A lot of employed individuals have a dream. I've done so many surveys on this on LinkedIn. How many employed individuals have a dream of being their own business person? And I think about 90% of individuals that I had a poll with in LinkedIn all said yes. Like, yeah, I would love to have a business. I want to have my business. That's my dream. You know, I'm only in this job because it's keeping me going till my dream. And when it comes to this dream, you need to be able to pitch. You can otherwise, because being an employed individual, you're so used to having a paycheck that you don't need to technically pitch for it anymore. You pitch once to get the job, and then you're in the whole process. And if you get a promotion, it's kind of gradual, or you can work your way up. And impressive people keep moving up, of course. But what will stop you from being a business person is your inability to pitch for clients or pitch for money. You need to be able to do both of those. So whether you're going for a promotion or you want to get your own business, this applies to you. So really, really important. If you are already a small business owner, right? So I'm just going to abbreviate. Small business owner, maybe you just want more clients, you know, and you're thinking, I don't feel confident getting more clients. Well, that's because you need to be confident pitching, right? So that's really important. If you are a company owner that is pitching, a founder or a business owner, pitching for capital, so capital raising. This is a game changer. This is where billionaires are built, okay? And this is why I am pushing this a lot more, because part of the Billionaire Project, we want to see people, including myself, move towards the billion level. And it is possible because I've studied how it works. I've seen my billionaire friends do it, and it doesn't come from, you know, running a business privately all the time. You can, if you've got investment. I mean, I'm talking about, you can't become a billionaire in a period of 10 years or less without getting capital. Okay, so if you want to become a billionaire in your life, you need to learn how to pitch. Because let me give you an example. Let's imagine you raised 10 million, and I'll put this in pounds, and you gave away 10% of your company, okay? 10 million for 10%. So this is your company, and that's the 10%, and that's 10 million. What is the net worth? You are the 90% X left over. So this is 10% that you've got 10 million for, and now you've just got the 90% left. What net worth have you just created from that capital raise? You're 90, right? You've just made this 10% is worth 10 million. You're 90%, so it's 90 million net worth. I made it so simple, right? Each 10% is worth 10 million. You're a 90% shareholder. Therefore, you become the 90 million net worth. So, I mean, Elon Musk, great example again. The guy has so many billions, but it's not cash in the bank. It's net worth like this. It's like that, you know? So it's basically, he is so good at capital raising. By the way, he does capital raising in Monaco a lot of the time. He came to Monaco 2 years ago after the Grand Prix. He used a room that I'm I'm aware of, this really, really nice boardroom. He used that, he hired that, and he pitched to a group of like 6 to 8 people for more capital. And that's how these founders are. These people are billionaires. Jeff Bezos, he pitched, right? He started Amazon trying to get $1 million for the startup. He ended up going to 50 people to get that 1 million because it was so tough. Nobody believed that books or online bookstores were even a thing at the time. So the ability to pitch is incredibly important to build net worth. Let's give you the typical scenario. What I'm going to teach you to do, and for Monte Carlo, is minimum 10 million pitch. For argument's sake, if you raise 10 million for 10%, you've created 90 million net worth. You carry on doing that. You do a second raise, third raise. This is how people become billionaires. It's not because they suddenly have $1 billion land in their bank account. It is net worth. And then how does that become liquid? This is how it becomes liquid. Do you remember I mentioned Morgan Stanley that I'm working with? Any investment bank, it doesn't have to be Morgan Stanley, but the key thing is that they will lend 60% against your assets. So if you've got 90 million, let's just say this is what you're worth on paper, and it's proven because we've got an investment, so therefore your net worth is 90 million. They will lend 60% on that. So it's close to 60 million, right? So approximately 60 million cash is what you could get out from a bank after you build net worth. And then you reinvest that. So do you see now very easily how you build capital through your net worth? But you got to pitch to build net worth. So you got to pitch, build net worth. Your net worth will give you capital, which you then reinvest, and you make more money and more money and more money. So this is the beauty and absolute necessity, in my opinion, of learning how to pitch. And that's what I want to show you guys, okay? So the people I'm looking for, so pitch in Monte Carlo, right? What I'm looking for is a founder with a startup. If you are a startup, I'm okay with it. As long as I have trained you to do the pitch, then I know your revenue model is good. I'm going to go through your revenue model. I'm going to go through the risk for the capital investors, like how is your asset class protecting the capital that's coming in? Like that, I'm okay with. If you are good and I've ticked you off, then you're in, right? I can allow you to come in to Monte Carlo and you will be able to pitch in front of a group of curated audience. You will need a little bit more help. You will probably need a lot more mentorship, I'll be honest, because you're brand spanking new. So yeah, be aware. But if you are already a seasoned, change the color because that doesn't work. So seasoned entrepreneur, and you've got a company, you're capital raising, right? So you're already making, ideally, if you're doing an EBITDA of 1 million, I really, really like you because I think you're already quite seasoned. If it's anything under 1 million in revenue or EBITDA, then I will need to nurture you a bit more, okay? So, but if you've got it, again, I'll go through the same process. Make sure that your revenue model is good, that I can make sure the asset class in your company or your venture is protecting the capital. That's it. If it's safe for investors to invest in your company, then you are able to raise capital with my audience. The next person I'm looking for are closers. So you could be, this is the quickest way to make money, right? You could be like, I just want to be part of this, but I haven't got a business. I don't have an idea. What can you do? Well, this is great because I am always in need of closers. If you can close capital, then for everything you close, I could give you 5% of the capital you close, right? So if you, standard is 2%, right? Bankers I use get 2%. So I use many bankers in the world of investment raising. Barclays Bank, for example, they get 2%. And I'm very good relationships with many of the tier 1 banks. So when they raise capital for me, I give them 2%. But I can either do market standard or more. So if you guys just want to close, you have to be trained by me to close capital. So you can make a lot of the money. So you do the maths, right? So 5% of 10 million, let's just do the 5%. I'm not saying that everyone will be a closer, but if you are someone I think is good at, if I've trained you, that's 500,000 for closing 10 million. And that's the minimum size in Monaco. If you come in too low, it looks a little bit, it's frowned upon. So when I'm raising, I've got minimum 10 million allocations for my property fund. Why? Because property is so safe and the asset class is protecting the money. So everyone who puts money into the fund, their money is protected by the property. So even if things go wrong, their money is held in the property, which has already got all the value. So their 10 million in the fund goes into property that's worth 10 million or more. So they can't really lose unless the market, wiped out a further 50% of market value in real estate. We know historically real estate goes in cycles, but it always goes up. So that's why I'm confident pitching for capital on real estate, because it makes sense. You can close my deals. It's so easy. I'm going to get to 100 million as the first milestone very easily. And then after that, you can keep growing. You can be that person closing for me. So it's absolutely fine. And the next person, pitching in Monte Carlo, you don't have to pitch, but you could be an investor. If you want to be an investor and you want to learn more about what should you be looking for, it's nice to come on the other side of the table, because most people, investors I don't think all of them are intelligent at times. They might have made money in, like, for example, there was in Monaco, a couple of investors, male and female investors, and they're dentists. They made so much money because they sold their dentist practice in the US, and they're like 200 million, right? So they made a lot of money. But when they're looking at they just want to dabble in new things because they feel like they're this new investor. They don't understand fintech. They don't understand they get pitched energy deals or fintech or I don't know, anything, gaming. They don't understand it, and that's really scary because investors can lose money. Just imagine you've made so much money in your life because you understood your industry. Let's say you're a medical professional, you made loads of money, and then you start dabbling in things because you just want to be this clever venture capitalist. You're going to lose money, and that's scary. So investors should definitely come and learn what makes a good pitch, because you watching how I coach people pitch will teach you a lot about what you should be looking for in a pitch. And that's where the excitement is for an investor. You might be thinking, well, I don't want to pitch, but I'm going to invest. If you don't understand the behind the scenes, you could get in some serious hot water. So I do want to encourage investors to come to these kind of events too. When it comes to investing, there is something called public money, which is where you get when you're talking about which one's best to invest in, it depends whether you're looking at private equity. I'll go to the next page. So you've got private equity, which is money that is tied up into an asset like property, or even companies, right? Businesses that are private. If you have public markets, that is pre-IPO. So these are looking at, public listed companies. You're investing in the share market, etc. Now that's different, really different. And this can be more risky if you don't know what you're doing. So make sure you have education. I do both, right? I do the currency market and I do the private equity market. Ideally, to be a really good investor, you should do both, I'll be honest, because you understand the volatility differences. But when you're pitching for capital, you can do it in both. So you could raise capital here. It's very easy when you're a public listed company raising more capital because you already have track record. To go public, you need track record. So it's very easy. Hence, Elon Musk can keep raising money. Hence, Jeff Bezos can keep raising money. Any public listed company can continue to, and you guys investing in their shares is technically raising more money for them. So it's always easy to raise money. When I was talking about you guys pitching, the due diligence is in the revenue model. So for me to allow you guys to pitch, I need to make sure you are someone who would pass due diligence, in the sense that your asset class in your venture is going to protect the money. Ultimately, that's all it comes down to. How do you protect investors' money? That's what due diligence comes down to, the risks. So one of the things that you should not do when you're pitching, one of the worst things that you could do here is say you can say, oh, there is no risk, or we've taken care of every risk, or just say no risk, saying that this is completely guaranteed, which is illegal to say, but risk-free. Even in my property fund, the risk is the government. Look, we didn't know pandemics were even a thing until 2020, right? So I can't predict the future. I don't know if the governments and the economy could wipe out 50% of the real estate market. There's always that risk. And that risk means that it could play out. There is a chance. We don't know how big. And how does that affect the investor? The investor has a charge, or in America, they call it the first lien on a property, that their money is tied in there. So I can't run away with it. Nobody else can run away with it. The money is allocated to a property, which they have access to, and they can physically own, they own it technically. So that's how I protect the risk. So there is, and then they have to wait. So if the market did fall 50%, then we'd have to just wait it out, because if you liquidated, you would lose 50% of your capital, right? So that's why it is important to always talk about the risks. However, talk about a similar deal. I had someone pitch a biofuel deal, which some of my mentees already know about. And the risk there was huge, right? Because they were pitching this big power purchase agreement. I don't believe in a contract. I don't believe that you should be pitching based on a contract alone. Behind the contract, the asset class should have value too. But behind this contract, it was just biofuel that you could buy for £1.20 a litre and generators. So the asset class, they were asking for 2 million. The actual value of the assets were probably 100,000. So that's very unattractive. And I would not allow that kind of pitch to go to my investors, because I don't feel like you're protecting their money. I wouldn't put money into that. So I would only allow you to pitch things that I would feel comfortable putting my money into. And because I have such high bars to my standard, like such a high bar to get past, it would be very good. Inflation right now is very interesting, actually, because what I'm finding and what I work with global networks in venture capital, right? And the general sentiment is this, that, do you guys understand inflation well enough, or recession? Right. I'm going to show you what I'm doing here. This is a good point. In a recession, or the growth of companies is down, so the productivity is low, so people are making less money. So how you can normally, what governments do to control a recession is raise interest rates so that people, like they think that's going to increase productivity in some way, and like people are going to make more money in companies, but they would lower their spending by credit cards and debt that they can't afford to pay back, right? In a nutshell, that doesn't work. So what we're finding is increasing of this interest rate is not actually helping the productivity or the economy to increase. So the GDP figures, etc., CPIs. So what that now leads to is that, how do we get companies? So the problem we've got is companies are not making, we need them to make more money, right? Or sell more, make more products, make more money. How does that work? If the borrowing rates are expensive and everything is like, they can't borrow from a traditional bank, etc. So what is actually needed is venture capital, because that's what's going to give the capital injection for these companies. So actually alternative investment is something I'm in, right? Alternative investment means anything other than the bank. And people with money are the key. They're more attractive than the bank right now. So that's why I want to put you in front of incredible people, because wealthy people right now are thinking, well, money in the bank is giving me 5%, whatever, which is fine. But if you look at inflation, it's around 11%. So you're still negative. So how do we make the money work harder? They have to invest in companies, which will give us a higher exponential return compared to a flat interest rate. So the answer in a nutshell, without going too complex, is venture capital is going to be the answer to helping the economy grow. So there is a lot of excitement right now. People think there's no money in the market. There's tons of it, absolutely tons of it, because we need to see companies grow. Banks are useless. If you go to a bank and you try and get money out of them, they won't. They will lend against your assets. Just like how I said, Morgan Stanley will lend against your net worth, because they want to take, they won't give. They lend against holding you ransom. But a venture capital is going to take an investor approach on you much better than a bank.